Happy New Year, San Diego! 2024 is here, and we're kicking it off with a fresh look at the San Diego real estate scene. Let's check out the latest trends and strategies to help you buy, sell, or simply stay informed.
So these are the latest numbers between November and December of 2023. And looking at that, just those few weeks, new listings were down 37.3%.
That's not completely unusual for this time of year, but still, we were already down, and year over year, it's quite a drop.
Yes, for sure. And pending sales were down 4.9% from November to December. Closed sales down 7.5%. The number of overall homes for sale was down almost 2%, and then median price fell off by 3.2% from November to December.
Okay, well, let's check out some long-term trends.
Yes, looking at what's gone on the last 3 years, it's just part of a fairly long-term trend here, which is new listings just going down and down and down. Just from the past 2 years, we're off 50% from 2021, which was already down from the year before. So the number of new listings has really been an issue for buyers in the marketplace over the last few years. With fewer listings coming on the market, it just makes for a more competitive environment.
And it's keeping prices high despite rising interest rates.
That's right. So going back into history a bit here and looking at this roughly 10 years, you can see, and we've talked about this before, just this regular repetitive pattern that was occurring. And if you go back even further than this, it was continuing to occur.
And then
2020 happened, and everything got really kind of weird. 21 and 22 looked pretty similar when it came to new listings. But then once interest rates spiked in 2022, the number of new listings just plummeted. It really did, and it's making things a lot tougher. And of course, the reason for this, in I think our opinion and many others, is that rising interest rates were the main culprit here.
Which is a result of all the stuff that happened in 2020, all of the economic shufflings. And
right. And of course, having had record low interest rates for the several years leading up to 2020, if you look back at the history of interest rates in the 2s and 3s, it's like a 50-year phenomenon.
And people who locked in those rates, which is a lot of homeowners, don't want to trade that for an 8% rate, now 7 and the 6s. Maybe as it gets down into the 5s, it'll become more attractive for people. But people are holding on to the rates and not putting their homes on the market.
Yeah, the conventional wisdom around the water cooler is that rates in the 5s are going to be the catalyst to get things, more back to normal again. We'll see. Hopefully we'll see. So then looking at closed sales, which is, this is where the rubber meets the road. This is where the economic activity happens. When a sale closes, people get paid, people make money, not just realtors and lenders, but lots and lots of people.
All the trades.
Yes, all sorts of people make money when a home closes. And again, just like with new listings, that just has been cut more than half since 2021, and it was already low in 2021. So just the overall real estate activity in San Diego County has fallen off drastically in the past 3 years. It's really remarkable. And then looking back here at the 10-year chart, again, same thing, regular patterns until you get to 2020. And I suppose we are now starting to see a regular pattern, which is down.
It's not really a pattern, but
well, it's a trend.
It's a trend.
But the trend has been definitely down. We see our last peak of activity here in 2021, and then it has just gone down since then. You can draw a pretty nice little trend line.
Ski slope.
Yep, ski slope down. So that has really impacted a lot of folks, and softening rates should make things better.
Again, we hope to see.
We hope to see that in 2024.
All right, let's check out median prices.
Right. As we already mentioned, median price has continued to go up while all this activity has been on the decline, which is good news for homeowners, not the greatest news for buyers, but it hasn't been a really crazy climb like we saw in, from 2020 to 21, from 19 to 20 to 21, we saw really crazy jumps in median price. And here we are, 21 to 22, it was only up 1.8%, and then 9% from 22 to 23. A lot of experts were saying median prices were going to go down in 2023. That did not happen.
Real estate was supposed to crash this year, or last year.
Yeah,
it didn't happen.
Well, and it may someday, and it will someday, but we didn't see it last year, and at least the way 24 is starting out,
seems unlikely.
Unless there's some crazy thing that happens, it's not going to happen in the first quarter of 2024. So prices, have increased quite a bit from 22 to 23. We'll see what they do in 24. Okay, so
let's talk about mortgage rates.
Yeah, mortgage rates.
What are we doing this week?
Well, I looked at this earlier, and I'm not real thrilled. I'm not really thrilled with the average 30-year fixed rate here.
That's kind of a scary number.
Yeah, I wish they'd have rounded this differently. But
this is Freddie Mac chart, by the way.
Freddie Mac. Maybe we should look at Fannie Mae this week. Maybe Fannie has a more friendly number. Okay. 6.66 is the average for the past 7 days, and that is up just a touch from 6.62 from last week. And, hopefully next week we see a little decline, or at least a
different number.
A different number, yes. So that's what's happening with rates right now. And the Fed has signaled that they're done jacking rates up and may even cut rates.
Likely to, well, I think the word on the street was there were likely to be 3 rate cuts this year, but We'll see what happens. We'll have to look at the inflation reports, the jobs reports, and, it has yet to be seen.
Right, and of course those Fed actions aren't the only thing that plays into rates, although plays a big part in the overall situation. So with any luck, we'll get down into the high 5s by the end of the year, maybe less. Keep your fingers crossed.
All right.
Because better rates make it better for everybody.
Well, we'll be here. We'll stick around. We'll keep you informed.
Absolutely.
Is that it for today?
That's all I got for today.
All right. Well, thanks for watching. We hope you enjoyed this. If you did, please like, share, and subscribe, and we'll see you next time.